Good morning or good afternoon, good evening, everyone, and welcome to a new video. I have a new setup. I'm trying some new stuff out. I hope you like it. And above that, I hope you're, of course, having a great day. So yeah, without further ado, of course, before that, subscribe, like, and comment if you want. I really appreciate all of your comments, especially the very supportive ones I've received in the last few days. But yeah, without further ado, let's dive into today's topic, which is the Fed and the impact on, or the Fed's decisions and the impact on the cryptocurrency markets. I'm super excited about that. So yeah, let's dive into it. Yesterday marked a significant turn in monetary policy as the US Federal Reserve announced
to lower the target range for the federal funds rate by a half percentage point,
bring down the federal funds rate from the 5.5% range it was sitting at. This move comes after an aggressive hiking cycle where rates were raised 11 times in just 16 months, and that was followed by a pause that lasted over a year. Now, why does this matter to you, and more specifically, why does this matter to the world of cryptocurrencies? The Fed's decision to cut rates is a response to several economic indicators. Inflation, which has soared past 7% post-COVID, has been wrestled down to around 2.5% as of July, though some might argue that the numbers in real life might still be higher. Unemployment rate has also been creeping up, indicating a cooling job market with fewer new jobs created compared to August from last year. This rate cut is intended to stimulate economic activity by making borrowing cheaper, potentially encouraging business expansion and consumer spending. But there's more to this story. We're seeing similar actions from central banks around the globe. The European Central Bank, Canada, the United Kingdom, and China have all made their moves. This global rate cut trend suggests a coordinated effort to inject liquidity into the world economy. So here's what I think could be happening next. First of all, the interest rates will continue to fall. This could be the beginning of a series of cuts aiming to stave off a recession or stimulate growth. Then we will also probably see global liquidity expand. With lower rates, more money flows through the economy looking for places to yield returns. That could also lead into more money printing. So to support these rate cuts, there might be an increase in quantitative easing, essentially printing more money. And government deficits could also grow as spending might increase to stimulate economies, leading to higher global debt levels. Now, let's connect all these dots to what's happening in the crypto market. So historically, when money becomes cheaper and more abundant, investors look for alternative investments to hedge against inflation and their currency devaluation. And here we enter Bitcoin and cryptocurrencies. With gold hitting an all-time high, Bitcoin's narrative as digital gold strengthens. As investors seeking to preserve value, they might turn to Bitcoin, especially with its fixed supply cap, contrasting sharply with increasing fiat supply. A next factor to look at is institutional interest. This landscape for Bitcoin has changed quite a lot with ETFs and increased institutional adoption. This rate cut could accelerate capital inflow from institutions looking for high growth potential in a low yield environment. We're also in a US election year. Election years have historically always been very good years for asset prices like Bitcoin and stocks. Political uncertainty could also drive investors towards assets that are seen as outside the traditional financial system. And Bitcoin is an example of this that could benefit from this uncertainty as a non-correlated asset. All of this combined could be a perfect storm for crypto. Lower borrowing costs means more speculative investments that could flow into crypto markets. And moreover, with the Fed's actions potentially weakening the dollar, Bitcoin's value proposition as a hedge against inflation becomes even more appealing. In conclusion, the Fed's rate cut might not just be a lifeline to slowing the economy, but could also be a catalyst for the next big bull run into crypto markets. All of the conditions are aligning. You have increased liquidity, a search for yield in low interest rate environments, and a global economy backdrop that makes decentralized, non-custodial assets like Bitcoin increasingly attractive. So whether you're a Bitcoin investor or you're just observing everything from the sidelines, keep your eyes out on how these, let's call it, economic maneuvers are playing out. They might just pave the way for Bitcoin and altcoin to see crazy new all-time highs next year, potentially even by the end of this year. So yeah, let's keep watching all of this, and especially don't forget to like and subscribe so you can keep watching my updates on how all of this unfolds. I appreciate your support, and I'll see you in the next video. Cheers, bye bye.